General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Let's do the work. Today's Thursday the 26th. Today, expansion day. Engage. Immediate confidence. Got the idea. We ran the low, got a little reaction, but it failed and went down. So the plan didn't give everything. Anchor point is still Monday. It's still in Monday range. And it's Thursday. No. So it was really like a whole rotational week. And I don't think last week was that big of a week. Opened here, went down. Yeah, it's weird. So Nas100 charts. Only real news was the Meta lost that lawsuit. That was in the afternoon, quite around lunchtime. So one-sided 3-session down close. One-sided It's been slow, grinding. Price held again for New York AM session. Let's see here. Nice little reaction here. And we kind of just use this to sell off. The sale started at 12. That was a PM session drop. So we actually got a candle today. On the daily. It's not a doji. Last 2 days been dojis. And this basically happened at 12 for the most part. Retrace towards the end of the day, people closing positions. This sets up a weird Friday. Because we can go back to 50% on Monday or continue this down move. Price doesn't seem to be in a rush to go down. Let's go SPX. Like it just triggers some buy orders or something. It don't look too serious. A little spike up at the end. One-sided down day. Okay. Not even close to Monday low. The distance. quarterly low, previous quarter low. Yeah, we kind of got the same thing here. It's not screaming bearish. Bearish is most likely, but it's a good enough chance that we just go to 50% on Monday too. That's the only two outcomes I kind of see. Monday or continuation. Only thing that can push us up is straight over news. Not the crazy news, but the real news. We don't know what's real because it ain't no reliable. It ain't no reliable news. Everything's biased. So just spy. It's just a new week opening gap here. We closed and we're below it now, but we still hold up, I moved it. Let's see what 50% of this is at. Let's do it like this. Yeah. Kind of makes sense. Push down, weak continuation. This thing, it's like fake selling. Nope. Like every sale, candle to candle after it doesn't take the low. You see that? Mr. H1. Don't take the low. This one takes it. This one takes it. It's the only real 11, 1. It's downtrend. Looks weak. Would look for a turnaround. Also note, we're not giving TE retracements. It's building a base and dropping it. See what this look like. Okay, we took that low on QQQ, but we ain't do it on CFDs. It's interesting. We're way below. So the sell on Nasdaq would have worked. QQQ. This on the other hand looks very bearish. And continuation seems likely since we have body closures through the key levels. No, I was looking for higher prices. Jack be nimble. Watch for tomorrow. Steady delivery. All right, that's that on that. Have a good day. Peace.